So today is Monday if you're watching this at the same time I publish it, and I want to guide you through my best trading setups in the past week. I don't do a lot of like these live trading things because I swing trade and it's taking a long time to close some trades, but I want to give you a good inspiration from the past week, show you the best setup I've had, some less good ones so you can kind of see what things to avoid this week and what things I'm avoiding myself when I trade, and we'll be able to get through this. I'll show you today two strategies, a reversal one and a day trading one in the Asian session. And I've been trading it for a little bit of time because I was really busy, but I'll show you the trades anyway. You'll see them back on the chart and we'll dive right in. Okay, so here we are in TradingView, the fancy TradingView platform. So what we'll start with is this Asian trading session I'm doing here. So this is pretty cool. I trade this on AUDJPY when I have time. I have an indicator I coded recently to be able to be alerted of these trades when they happen. So it's faster and easier to do it. But we'll kind of go. So here's Monday and I want to look for trades. So I look for reversal trades on this 15-minute chart or the 5-minute charts. And basically you'll see when you have the short entry, it's not very clear yet, not very like precise. I have a slightly different entry, which I'll show you about. But I'll show you the trades through that. So first things first, we look at a range from between a couple of hours before we start the Tokyo session. So we start 7 p.m. Eastern time, right over here, 7 a.m. because of my time here is in Bangkok time. So UTC +7, which you cannot see because the camera is on it. So what we do is we look at this range before. Range identified here with these lines. So the low limit is here, the high limit is here. And then we kind of go and look for breakout of that. So breakout happened over here. Now we want to have a candlestick that doesn't make a new low from the range. All right, so this one here didn't make a new low of that range. So we would place our entry order just a bit below here, right? Below this low as a sell order, okay? So what this would mean is we look for candlestick that breaks the range, look for one that doesn't make a new low because we want to sell. This one didn't make a new low, so we enter below the low of the range here. The candlestick that broke the range, the lowest low over here. So this of course would be a loser. See how with this here. All right, this is a losing trade. I usually target 1-to-1 for these trades, so I have a very high win rate, but this one is a loser. That's fine, that's good. All right, let's keep going. Now, price came back, okay, reverse. Now we had a second entry in this session. Okay, you see the same range, price went back, hit the same range, the high, came back down within the same range, and broke again the range. Now here's interesting. So what we do is we wait for breakout of the range, which in this case we had over here, this candlestick. Now you could agree it's this one here, it's fine, it doesn't really matter because this one kind of breaks the range more clearly. What we want to do now is wait for a candlestick that doesn't make a new low and enter below the most recent low. So here we have this one, makes a new low. It's very small, very hard to see, but it does make a new low. This one here didn't make a new low. So when we would enter our trade just below here, after this candlestick of course. So we put our entry order, again a sell. Very rare, by the way, you have two sells in one day or two trades in one day even. It's quite rare, but it happens sometimes. We had this on Monday. Stop loss would be right back within the range. So candlestick that broke out. This one here, because we have a big wick in the range, I'll keep this one. And we target a very nice and easy 1-to-1, which is over here. Okay, you can see trade triggered in only 1 or 2 candlesticks after. It takes a bit of time to be triggered. I would tend to cancel the order if it's not triggered in the next 5 candlesticks. We have here is where we put the order 1, 2, 3, and 4 trigger. Okay, so actually 1, 2, 3. So triggered. So that's pretty good. Okay, so we have 1 win, 1 loss that day. It will be 1% on each trade or less. So if it's the same percentage, then that's a break-even day. Then we move on to here is on Tuesday. Same range, bit more clear now. Okay, this is better. Our entry here is way messed up, I believe. We'll have a look at that. So let's do it here. Actually, no, that's what happens. Okay, so same principle. You're probably able now to do it yourself if you want to. So what we do is we want to wait for a breakout of the range. Here's a wick. I won't consider this to be a breakout. This one is a breakout of the range. Break the range. Now we make a new high, new high, new high, new high. This one, I'm not sure if we made a new high. The high is 232. And this one here is 0. Cool. This one make a new high. This one didn't make a new high. So our entry order will be just above here. Now it's a bit tricky because we're very far from the range. Ideally, we want to enter earlier, but I respect my strategy. My strategy says you enter when you have a small pullback. Small pullback is here. Cool thing is the stop loss would be pretty small here. So I won't put my stop loss all the way back down here. That'd be crazy. I'll put my stop loss just below here. Can I say that made a push in the range? Okay. So now we wait for this entry to be triggered right above this high. It's triggered here, so we get in the trade. And here we go long. Now, by the way, you can tell that I'm doing this video here because, first of all, I love this strategy. It's a good one. But also, I didn't trade this the past week, so I want to show you how it works. And I kind of train myself to go back on the chart this week to trade it. So it's pretty cool for me to do it in this video with you at the same time. Okay, 1-to-1 here triggered. Perfect. And we're done for the day. We didn't come back in the range, so we're good. Only one trade for the day. Okay, pretty nice. Now we'll go and we get to here, which is Wednesday. Okay, Wednesday is also a really good day for this strategy. So our session starts here. We kind of have a breakout before, but our session starts here. So we'll just look at this here for the trade that we want to take. Again, same principle. You can tell. You can probably do it yourself once again. We have a break of the range right over here because this candlestick is breaking the range. Wait for the candle that doesn't make a new low, which in this case is going to be not this one, not this one over here. We enter below our low, which is probably triggered right there, this candlestick over here. So we'll put our entry order right there. So short, once again, and we're triggered here. If not here, the next candlestick is triggered probably. We'll put a stop loss in the range. Candlestick broke out the range because it's very, it's not that far. It's pretty all right. If you want to be very aggressive, you could put it right over here, but that to me is too aggressive. So I'm going to put my entry order right here. Okay, and here we go. And 1-to-1 is triggered here pretty quick. Okay, we could have gotten more than 1-to-1 on this, but we never can tell, we never know. So we just stick to it and we can do it that way. All right, so far we have 3 winning and 1 losing. All right, then we get to Thursday. Bit of a choppy day here. Try to hide the future data just to make it more realistic. So let's see how we do this. So we have a range. Here we enter the session right there. And now what we do is we are looking for a breakout, which we had over here. Now this is a day where we probably are not going to place any trade. I'm guessing, but we'll see. Wait for the candle that doesn't make a new high. This one over here, the next one. You can see it says or entry order here, long entry. That's kind of the one. But we want to enter here just above the high. Okay, that's very essential. Now this one, you'll see it's triggered only far into this session, only here, right? That we are actually triggering this trade. My rule is 5 candlestick. So here we have, after this one, 1, 2, 3, 4, 5. Boom, we didn't go. So we'll cancel the order for that day. We won't take it. It's too far. And we kind of didn't really go from very far from there. So once we have our entry placed, we want to cancel it within 5 candlestick, if not triggered. So this day we wouldn't take any trade. So we're done with this one. We kind of avoided a small loss in this case because price would not have pushed far enough to get us into profit. So we kind of have a good scenario here. Pretty nice one. And then we get to Friday. Friday is also a fun day. Because it's a bit messy. So we've got 2 breakouts. Okay, so very fun. The first one is here. So this candlestick here breaks the range. Now if a candlestick doesn't make a new low, here we have a new low. So then we go back here. This one doesn't make a new low, but we would have to enter here below this low. You can tell it's not triggered at all anytime, so we will cancel this order. So this one is not triggered at all on this Friday. Then we have price going back on the other side of the range, breaking the range again. This candlestick here breaks out from the range. And then we have this one, makes a new high, doesn't make a new high, but we have to enter here right above this high, as our entry rules say for this strategy. But then this is not triggered at all, either, right? Because we have price not going even there at all. So we'll just cancel this order after 5 candlesticks. So this would be 1, 2, 3, 4, 5. Cancel. Now, the indicator here says we have other breakouts. We clearly don't have other breakouts because we're still within this high. We didn't go like far beyond or breakout from this high either. So I was just not taking any of those. These are just kind of bad trades or bad example of the indicator being not so accurate, but still accurate enough to trade it correctly. I will just kind of avoid these ones here. They don't mean anything. They're just on the chart to show us that we could have some setup, but we really don't have them. So I'll just avoid them. And then we get to here. So we finish our session. And that's it for the Asian session strategy. I hope you got some value out of this. So we have 3 winners, I believe, and 1 loser. It's pretty good ratio. So 1, 2, 3, and we have this one, and this one is loser. So pretty good, right? If you go at 1-to-1 with 1% per trade, or you could do 0.5% if you're more comfortable with it, then that will give you basically a 1% profit that week. It's pretty good. Only for more strategy, by the way. So now let's go, and I want to talk more about swing trading because that's really where I make the most money and where it's kind of like the thing I do the most. So I'll just hide this indicator here before so we can just get rid of it. Here we go. So a couple of trades here, very few trades this week, but 2 I want to show you mainly that are important to have a look at. Maybe 3, maybe we'll have a look at USD CAD, but I'm not sure yet. First one is on AUDJPY. Same thing I do for my Asian session trading strategy, but this one is reversal. So you'll see where we have price here being in a very nice consolidation. So you can see price was here. This is the daily chart. Price went back and hit this resistance. Now look at these zones on a mostly weekly basis. Every week I'll look back at the zones. But this one I see we have a very strong resistance at 98, okay, 98.0, a round number as well. So whenever we get close to that level, I'll start to look for trades. Then these can be small targets because I look at these on lower time frames, so I don't have to target like a very big move. These are only usually 2 to 1, and that's pretty much it. And I have this new way of looking at the reversals with price action patterns that are a bit more, like less strict than before. Before I used to look at the Bollinger Band. I still do. It's still a big part of my trading. But now I'm looking at more the setup on a slightly less strict level. So engulfing candles, pin bars, and I just want to make sure they're not beyond the middle band of the Bollinger Band. But that's it. That's pretty simple. So we'll go in low time frame to see this. So I'm just gonna make this one here. Okay, so around this level, and we'll see here on the 4-hour chart where we have a nice trade here. What this is it's a very small but still accurate enough. Let me pull this up correctly. Reversal setup. So we had a few of those. We have one here. It's basically this one, what you would call a dark cloud cover. Right? So we have a small gap. We have this kind of stick engulfing the other one, closing below. Okay, you can see these triangles here show me the setup I look for. And I just do a simple, in this case, 1-to-1 for my first take profit, and 2-to-1 for my second take profit. 2-to-1 is right over here. Let's do this like this, and this one was also reached very easily. A little bit later, but still. Okay. All right. It's kind of how it looks here on this this chart. So very simple. All these set up with a triangle. They're either engulfing candles. Actually, they're all engulfing candles. I don't have pin bars here yet because pin bars are still in testing. These are only the ones I trade live on my chart. So I want to make sure that I take trades when it's not going beyond the middle band of the Bollinger Band. So here's a good trade, like the one I showed you. This one here is not a good trade because we go beyond the middle band. We have to enter here below, and the middle band is over here, right? This band over here, this line there. So we don't have any room for profit for that trade. This one, same thing, I skip it because it's beyond the middle band of the Bollinger Band. It's a rule I have for my Bollinger Band reversal strategy that I use for a long time. It works really well. I only take trades when they are in between the upper band and the middle band for a bearish setup. Of course, the inverse for the bullish setup. Here again, we don't take this trade, it's beyond the middle band. Here, of course, we have no room for profit. We don't take this trade. And here also we don't take this trade. Even if we could have a 1-to-1, that's still break even. Same thing here with this other trade right here. Okay, so that's kind of how it works. The same thing would be the other side. Now we are here at the resistance area, which you can see at the top right here. So we don't want to look for bullish trades. We want to look for bearish trades only. Only these sell trades, not the bullish, the buy trades. So all these sit up here at the bottom, we wouldn't take them because these are bullish setups. Okay, we only want to sell at the resistance and buy the support. So that's kind of how it works. Okay, pretty good example here. It works quite well on this. Let's go to another one. I'll show you USD because it's kind of cool to look at different markets sometimes that are a bit more tricky or a bit harder to see. USD this week was tough. And the reason is we have a very strong zone, a support zone at 1.325 or so. Okay, very strong level where price bounced many times in the past. Okay, you can see it's very strong. Then price came back down to this level this week. So you can expect to look for bullish trades here, right? Now we have a couple of trades. And we'll zoom into here to kind of find these trades. So 4-hour chart, 1-hour chart. I'm only going to show you one because it's it will take some time. Let's go on the 1-hour chart because it's a bit more setup there. Close this one here. So, all right, price comes back to this zone. You can see prices here, came back here to 1.325 or so, right, this area. Now we have a few trades we could have taken. We have a lot of them here. Again, we don't want to enter beyond the middle band. So we would have a few we can enter here on this particular pair. I mainly want to show you one from this week because this is a while back, actually June 13, sorry. So a while back, but the idea would be where we have this setup where price breaks the Bollinger Band, engulfing candle here, enter above the high, stop loss below low, and we target on these the 1-to-1 and 3, and we target 1-to-1 and 2-to-1 on this. So somewhere over here, this will probably be stopped out, maybe break even. I don't think no break even, stopped out. And here we had another one, but this one was beyond the middle band. Then it came back here. We have another one here that we probably would have triggered, but very tightly, right over here above the engulfing candle. Put a stop loss below, and target our 1-to-1, which would be over here somewhere, and our 2-to-1 will then be triggered here, or will not be close in profit, so we break even. So you see we have a lot of these here, and this is where you kind of lose most of your money if you do not do things right. If you don't filter enough, then that's going to be very tough to make money in these markets. Here again, enter here, stop loss low. We might have gotten a 1-to-1 here on this trade, not very much more than that. We're kind of stuck here with a very tight target. Here's where if you kind of keep going, a little bit below the zone, so this is below our support, price can sometimes just bounce a little bit below the zone and then come back up, and it's kind of what happens here. So this is where you're making your money the most, or most of the time, right? You got one setup here, which we'll probably take, which will be stopped out. Then one here, which is a good one. Again, we'll take it. Stop loss right over here. This one will give us at least a 2-to-1 like we want to have. So if you go here and long position, okay, this is where you kind of make back your money for the other trades you lost. Stop loss will be here, and we can target a 2-to-1, and that one here is triggered. So that's good. Same thing here. This one here will be beyond the middle band. We wouldn't take it. This trade right here, but we have a lot of them. Okay. The key here is you want to make sure you have a limit of trades to take per zone, because we're not going to just buy until we have like a good trade happening. We want to make a limit so we can cut the losses if it doesn't work out at this zone, and then just go away. Here are all trades we wouldn't take because they are above the middle band of the Bollinger Band. We would skip those trades here. This one here also, this bullish one also, and then this one also. This one could be taken here, so we can make some money here, and this one here would not be taken. So the only trades we've got, which is very tight, I'm not sure I would take this one either, is a trade over here. Okay, so it's been a tough week for this one. USD Canada was a very tough week this week. Now I don't take all these ones because some of them are going to be when I sleep. So all the ones in the daytime here are when I sleep in Canada, because I'm in Canada now. The ones I would take them normally in that pair. So yeah, so the one I want to show you here is USD Singapore. Usually USD Canada and USD Singapore are very closely related. They're very much the same, but not always. And here's an example of how that works out. So we have price hitting a resistance area, which is the 1.356, 1.355 again. And we have the same thing happening. This setup here was on the 4-hour chart. We have price here hitting right into the 1.35 resistance. We have a bearish engulfing candle forming. Very nice trade, entering here a little bit below the candle. Still above the middle band of the Bollinger Band, so we're good with this one. Stop loss above the high, and we target a 1-to-1. Okay, I'm still in that trade. And also a 2-to-1 on a different take profit here. So it's kind of how it works out. Pretty good trade here. I think it makes sense a lot. We just have to wait for this to happen. We had the same kind of setup when we hit this zone before, although this one would not be taken. And we have many of them on, of course, the 1-hour chart on this pair at many occasions. So if you want to trade this one, you could have been entering a little bit earlier, somewhere like here. This would be a good setup. This one will be stopped out though on a 1-hour chart. So you can see here how it's important to be careful about the time frame you trade. 1-hour chart has more trades, but they're less reliable. I have to filter them a bit more. The 4-hour chart has less setup, but they tend to be a bit more reliable on the 4-hour charts. So here you can see we have many of them on this chart, this time frame. I cannot trade all of them for sure, so I limit myself to the best ones. And I have some other filters to filter a little bit better on this 1-hour chart time frame. So that's it for this week. I'm still, of course, in some trades in the past week, which I'll keep monitoring and keep kind of letting run. I don't tend to tweak them too much when they're open. I just leave them run and go away and do other stuff. If you have any questions on what I trade, if you want to have some more tips or advice, make sure you comment below the video. Let me know what you want to learn more about. I'll do some more videos this week about my strategy, things I look for in the market. I'll be happy to help you out with this. And a thumbs up would be, of course, really appreciated. I'll catch you back here in the next video pretty soon. Ciao.